Well, folks, I think we're ready to go. Can everybody hear me? They got so many wires up here. If I pick something up or hook myself up, I think I'll short circuit or trip over something or whatever. So if I can, I'll try to speak loudly. If it start to trail off, somebody in the back put their hand up, and I'll try to do a little better job. As I said earlier, I've been practicing for a little over 30 years, but probably for the first 4 or 5 years I didn't do much municipal work, but ever since that time I've done a lot of municipal work and been involved in that from a lot of night meetings, a lot of long meetings. I appreciate people that can run a good meeting, get her done, cover the agenda, and get out of Dodge. And so, but in the course of that, one of the things that I noticed is that the meeting that the auditor shows up at, their eyes just kind of glaze over and everybody kind of goes, ooh, you know, and then the auditor goes on, and I know that I've said this a couple times to the auditors, you know, I thought it was pretty wild and pretty innovative for some accountants to start using color in their graphs instead of just black and white. And that's kind of how some of that stuff comes across. And I'm not an accountant. I'm not a CPA. We have a lawyer in our office who actually is a CPA. But I kind of take a layperson's view of these audited financial statements with the idea that, you know, whenever you talk to anybody about their municipality, if people are complaining about things, typically they are complaining about taxes. They're concerned about taxes, and they're concerned about how their money's getting spent. And the financial statements for the municipality give you that information.
I want to ask if they can hear.
Yep.
This isn't on the handheld.
All right.
It's kind of hard to hear.
All right. I will try this. Hopefully this will, is it picking it up? Okay. So the the financial statements tell you all of that information, and it's critical information. And you know, I think there's an opportunity that's missed when the auditor comes through and talks to you about what's in the audit for that particular year, an opportunity to learn kind of how those funds are accounted for, what they really mean, and that type of information. So what I have up on the screen here, and you see that it's 86 pages, and we're not going to go through 86 pages, but we are going to talk about some things that are shown in the statements, not the particular numbers that happen to be shown, but more just the idea and the concept of what's out there and what information is contained there. Let's talk a little bit about just the audit process when you think about it. And that is, generally, the auditors aren't responsible for putting together the financial statements. They review, they look at the information, but it's the municipality's responsibility to create and account for and put together the financial information. So it's the treasurer's responsibility, it's the board's responsibility in overseeing the treasurer to put together this financial information. The role of the auditor is to determine whether or not the financial information that's contained in the financial statements for the municipality accurately represents the financial state of the municipality. So that's what the key factor is. And one of the things that you want from the auditor is basically a clean audit statement, a clean audit letter, which says that all of the information that's contained in the financial statements accurately represents the financial status of the municipality, and there are no material misstatements of the information that's contained in the audited statements. Every audit that you will see has this auditor's letter that's at the beginning of it, and it's going to have some language that's similar to this. In our opinion, so that's the auditor's opinion, the financial statements referred to above present fairly, in all material respects, the respective financial position of the governmental activities, the business type activities, each major fund, and the aggregate remaining fund information, in this particular case, the Village of Baldwin, because I happen to live in the village, I grabbed their particular statement. But the key language is that the statements present fairly in all material respects the financial position of the municipality. So that's the key element. That's the information that you want to get from the auditor. And if you don't get that, typically there's a problem, and that has to be addressed from the management side, because earlier in their audit letter, what they'll say is these financial statements are the responsibility of the village management. So it's here it happens to be the Village of Baldwin, but whether it be a city or a village, or in most cases the towns aren't required to have audited financial statements, but they generally are going to have some type of financial statements so they can keep track of where they're at. The financial statements themselves are not the responsibility of the CPAs. They're not the responsibility of those folks to prepare those statements. That's the municipality's responsibility. So if you're on the board, or if you are the clerk, treasurer, or the administrator, you are the ones that are responsible for putting together those financial statements. So that's the responsibility lies, and that the auditor's only obligation is that they see that those financial statements accurately reflect the financial condition of the municipality. So let's move on here a little bit. The financial statements basically the audit statement basically has a couple of different components. One component is the statements themselves, the actual statements, and then at the end there's what's called the notes. And the notes are detailed information that's in a narrative form. It's not numbers, it's written, and it describes in more detail some of the factors that, the particular accounting procedures that are followed. So for example, in municipalities generally, or public sector clients, it's fund accounting, and so they look at the general fund, for example, or they may look at particular enterprise funds or proprietary funds or business-like funds that are accounted for separately by the municipality. And so if you think about the general fund, for the most part, that is the largest and most active fund that any municipality has. And so the general fund, that's where your tax revenues come in. Generally, that's where most of your expenses get paid out of. But separate from the general fund, you're going to have funds that the activity is not so much, well, it isn't generated by tax revenue, it's rather generated by fees or charges. So in that context, think about utilities. You get a sewer and water bill. Those are more business-like funds, and then you've got your sewer plant and you've got your utility department that's taking care of the water and that type of thing. And so those particular funds are accounted for. The revenues are the fees that are generated, not taxes, but fees and charges, and then the expenses are the expenses of running that particular utility. So those are distinct funds from the funds that are the general fund. And many times what you'll hear, I was on a school board for 15 years, and one of the big things with the school board, and I don't hear it as much with respect to municipal clients that aren't schools, is fund balance, fund balance, fund balance. And when they're short, somebody wants to use the fund balance. Well, think about the fund balance in this way. I think about the fund balance like my checkbook balance. And all of that, all the fund balance is saying of the various activities that are going on when you get to a point in the year, whether it's a fiscal year that ends on June 30th, or if it's a calendar year that ends on December 31st, your fund balance is simply the money that you have on hand on that particular day after they close the books. And the fund balance works the same as your checkbook. So think about it in the municipal context. You're going through the year, you set your budget, and you levy your tax, and in late December, for those folks who want to pay their tax bill in December, or by the end of January, you have a whole bunch of revenue that comes in. Okay, you get your tax revenue. And then you start the municipality continues to operate. You got payroll, you've got various bills that have to be paid. There's services. You've got if village or city, you've got your police force to pay, you may have fire officials to pay, and so all these expenses are going out, and the money that you collected from those tax revenues keeps going down, and then later on in the year, the second half of the taxes get paid, they get collected, and also you're going to get some of your shared revenues from Madison, and Madison will continue to, kind of pull the string on the municipalities because they'll keep pushing that money later and later to when you get it. But you then have that revenue that comes in, and now you've got enough money to continue now to the end of the year. Well, if your operating expenses are, coming in, let's say you're in July and you really haven't gotten your second contribution for the taxes, and you've used up all of that money that came in as tax revenue, what do you have to do? You have to go to the bank and borrow some money because payroll still needs to get paid. Other expenses of the municipality have to get taken care of. And so you borrow money, and borrow money costs money. And so the idea behind having a fund balance is to have enough in your checkbook, so to speak, or have enough in your general fund for the municipality so that when you come to those parts of the year where the funds get drawn down, you at least still have enough money to cover your expenses during that time period until you get the next infusion of money from those tax revenues. And so the theory is keep that fund balance at a level that enables you to meet those so that you don't have to do short-term borrowing. The other thing is that occasionally, as you're all aware, something happens and you've got an unexpected expense. And, again, I live in Baldwin, and here, it's probably 2 years ago now, we had this huge rainstorm, and the road went out by a bridge on Highway 63. There was a creek that flooded. There was, the creek, generally it's a dry run. There's hardly anything in it. And that flooded, and there was some assisted living facilities and the nursing home, and the water got up high enough, went over the bank, there's some kind of out behind the village hall, there's some assisted living facilities, and they had to evacuate the residents. And, those things so the municipality had some expenses related to that storm, and, that's not an expected expense. And so you need to have some money to pay those expenses, and what you pay that with is your fund balance, just like you would at home. You'd pay that from your checkbook balance. And so, the accountants generally have some recommendations about how much a municipality should have on hand for those types